We move on with the product panel piece, Yellow and Done, sponsored by Pulse Splitting and Processing Industries. This panel is going to be moderated by Anurag Tulsan of SRCO India. The panelists include Chad Popovich of Glencore, Vijay Iyengar of Agroco International Singapore, Andrew Ruland of Glencore Grain, Baldev Limbachi of Ruchi Worldwide, and Saurabh Bhatia of Glencore. Vijay Iyengar of Agroco International Singapore, Andrew Rowland of Glencore Grain, Baldev Limbachi of Ruchi Worldwide, and Saurabh Bhatia of Glencore. This, of course, is going to be moderated by Anurag Tulsan. He needs no introduction. He gave us a very pleasant evening yesterday. Thank you once again, Anurag. That's very memorable. As you're aware, SRCO Exim Private Limited, of which he is the managing director, is a division of a fourth-generation broking company involved in international broking of grains, pulses, sugar, oilseeds, and feeds. They act on behalf of reputable international companies for clients all across the Indian subcontinent. Similarly, they also assist first-class Indian companies exporting produce all across the world. As far as CICILS is concerned, Anurag represents India as the executive committee member of CICILS IPTIC. He's also a member of the GAFTA Pulses Committee London and serves as a member of the executive committee of the premier Indian body regulating trade of pulses and grains in India. That's the Indian Pulses and Grains Association. He's now going to moderate this session, this product panel on P, Yellow and Done, sponsored by Pulse Splitting and Processing Industries. Ladies and gentlemen, your moderator, Managing Director, SRCO Exim, Anurag Tulsan.
Good afternoon, ladies and gentlemen. Today I have amongst us a very, very distinguished panel, or I could rather say that I have with me stalwarts of the pulses industry with special emphasis on field peas, either yellow peas or dun peas. Before I begin the discussions and I get the panel forward, I'd like to briefly introduce them to you. We have with us Mr. Vijay Iyengar, founder and managing director of Agrocorp International Pte Limited, Singapore. Vijay needs no introduction as Agrocorp has global footprints all across the major origins and destinations. In less than 2 decades, he has turned Agrocorp into a trading powerhouse in the Asia-Pacific region. Ladies and gentlemen, Mr. Vijay Iyengar. Then we have Mr. Chad Popovich, Director International Grain Pulses, Viterra Glencore. Chad has been with Viterra since 2004 and has held various trading roles. On a day-to-day basis, Chad concentrates on the field pea trade focused on bulk and container shipments originating from Canada, Australia, and throughout Europe. Chad Popovich. We have with us Mr. Baldev Limbachi from Ruchi Worldwide Limited, Mumbai. Ruchi Group, as is known, is the largest importer of edible oils into India. It is a diversified group doing huge volumes of grains and feedstuffs and pulses. Baldev heads the pulses desk at Ruchi Worldwide and is a veteran in the pulses trade in India. He has held various senior positions earlier with Andre Group, Noble Group, UE Myanmar, Viterra India, and is now currently with Ruchi. Mr. Baldev. Then we have Mr. Andrew Rowland from Glencore Grain, Australia. Andrew has a proven track record in agribusiness with a focus on grain trading and grain marketing within Australia and overseas. Andrew has held senior roles with AWB, ABB Grain, Viterra, and Glencore Grain, and currently works as a senior trader with Glencore Grain, Australia. Last but not the least, Mr. Saurabh Bhatia of Glencore, Mumbai. He is an economics honors graduate from Sri Ram College of Commerce, New Delhi, one of the best economics and commerce institutions in Asia. He has held various positions in Dreyfus, AWB, and Cargill before joining as senior trader with Glencore Grain, Mumbai. He handles a very large book as India happens to be one of the biggest markets and consumption center for peas. As you all are aware, ladies and gentlemen, peas is a very, very important part of the total international pulses trade, which takes place every year. On an average, if we take into account the major origins, which are Canada, US, Russia, Ukraine, France, Australia, and some other countries, we see a total crop of almost about 6.5 to 7 million tons, out of which almost about 2.5 to 3 million tons are exported worldwide. So since we have such a such a distinguished panel amongst us, without wasting any more time, I would first like to ask Mr. Vijay Angar of AgroCorp about his thoughts on the current scenario in the peas market worldwide.
Thanks, Anurag. Actually, the pea market is in a very interesting stage at the moment. Basically, because of the weather concerns in Canada, the logistical delays in Canada again at the ports, and the sudden spurt of prices in Desi in India, it has led to a surge of interest in yellow peas, particularly a little bit in the old crop and in the new crop as well. The Canadians have been a bit shy of making new crop commitments, as a result of which there's been a bit more renewed interest in the various markets in India as well as in China. So all in all, there has been a bit of a resurgence of demand over the last month or so. What has been the primary contributing factor has basically been the delays at the ports, as a result of which, goods coming into various destinations have been staggered and in probably a better kind of focused and, let's say, a better organized way, leading to prices being fairly stable. Going forward, I think it all depends upon how the weather plays out in Canada. If there is warmer weather coming soon, the ice and snow melts in an orderly fashion, and the farmer is able to plant towards the end of April, May, the crop and the price signals that have been coming from the various markets seem to suggest that planting will be good. If there is any weather delay for any reason, and then of course you'll find that prices still remain stable or even move up substantially. Russia, on the other hand, conditions look good. The Russian conditions all depend upon what happens during the months of June, towards the end of May and June, where if you have excessive warm weather or if the weather conditions are not conducive to development of the crop, then you might see some issues. But otherwise, it seems that Russia is looking all right. France seems to be fairly stable crop, and Canada is where the question mark is, which is leading to the market being poised the way it is now.
Thank you. That was quite informative, Vijay. And since you mentioned that the Canadians are shying away and are not really offering much, I think, Chad, you would be the best person to advise us about the Canadian scenario as to why farmers or the trading companies are not coming forward to commit more volumes. What are your views?
I guess in Canada, Vijay is correct. The offers out of Canada have been, lackluster over the past few weeks, past few months, just because of the weather. It's really tough to say what they're truly thinking, but I think at this point in time, until they do get something in the ground, we will not see new crop sales pick up. As Vijay already mentioned, overall, the expected production is out there. If the snow does melt and the farmers are in the field within the next month and a half, we should still see about 3 million tons of production come from Canada this year. Similar to Vijay's comments already about the Black Sea, the acres are expected to increase there as well. And if everything is fairly, normal from this point forward, we should have plenty amount of production out there to satisfy the demand.
So you suggest, like the buyers, they should wait and watch for some time before really buying and going forward?
Pardon? Sorry?
What do you suggest, that the buyers should wait and watch for some time?
If you can predict the weather, what's going to happen in the next month, that's really the ultimate factor here. So to actually tell what the buyers are going to do, I think for the most part, over the past few months, I think the majority of the buyers do have some coverage.
Yes.
So I think, it's good that people do have some bought. Again, from a farmer perspective, they've done the same thing. They have sold a little bit. I don't think you're going to get aggressive selling from their standpoint until, a little bit more risk is off the table. If the value works for the buyer, then, it's something, if you can get bought, I'd say, do it if it calculates with the end-use destination market.
Thank you. Saurabh, since you are handling a very book in Glencore, Mumbai, and you are interacting with all the major buyers in India. What is your perspective on the markets in the coming few months? Where do you see the demand coming, and at what levels would Indian buyers commit for the current crop as well as the new crop going forward?
Okay, so talking about the current crop for now, normally every year what we see in India is that from March to May, the demand for imported product in India goes down. This year has been contrary because the crop in UP, which normally India assumes to be around 500,000 tons, seems to be around maybe 300,000 tons because of some weather concerns in late March, mid-March, because of which we have some quality damage and all those things. So UP, which never buys from port in the month of March, April, is already buying stuff from Mundra and Bombay. So we are seeing the port stocks depleting at a faster rate than they should. Average consumption that we use for India for all ports combined is between 125,000 tons to 150,000 tons. We already see that we are consuming more than 150,000 tons last month. The current stocks at Bombay port is around 40,000 tons maybe. Calcutta is around 30,000 tons. Other ports another 25,000 tons. So we are around 100,000 tons of port stocks, which are not even meeting 1 month consumption.
Correct.
So bare minimum we need at least 3 vessels from Canada or from any other origin coming into India every month, which doesn't seem to be a possibility right now. So it seems Indian buyers would continue to be there to buy out France or Russia or Canada, whatever is available. So the old crop demand would be there from the end users, from consumers. This would in turn also be supported by the prices of chana, which have rallied in April alone by around $60 locally. Yes, around $60 locally. So demand for old crop yellow pea should be there. New crop, again, this year what we are seeing is a similar trend what we saw last year for Australian chickpeas, when Indian traders wanted to buy new crop right in March, which will be harvested in November. So, we are seeing a lot of inquiries in India from end users to buy Sepok. This is primarily because of the weather concerns that are out there in Canada. Market is not very hopeful of maybe as large a crop in Canada as it was last year, which will get clear in next 1 month. So it seems India is out there looking for new crop and old crop both at quite an aggressive number right now.
So you see demand definitely being robust, and you do see inquiries coming in from all corners of India.
Yes, yes.
Okay, that's good. That's really nice. And now I'd like to ask Andrew about the Australian scenario, about the field peas, dun peas. Australia, I believe, grows almost about 300 to 350,000 tons of dun peas annually, a lot of which is exported into India, mostly into Tuticorin and some into Calcutta. So Andrew, what are your views?
Yeah, well, I mean, the crop that we've just had in Australia for our 12-13 season, it's probably one of the lower crops that we've had in recent years, very much the low end of the range at, around 300,000 tonnes. I think, that should improve for the coming year. But I think, we've seen very, very solid demand for the Australian crop, and we're expecting the crop to be pretty much cleaned out this year. It's a little bit hard for us to focus on the new crop. I mean, our planting season is just about to commence, and we're waiting for rains at the moment. So we're still sort of focused on moving our crop for 12-13.
So do you see any changes in the acreage or the sowing pattern this year as vis-a-vis the last year?
I think peas, if anything, are probably a bit under pressure from other crops. Lentils, obviously we've seen a good price recovery on the lentils. So farmers that are growing peas and lentils are probably, I would imagine, are going to be more inclined to lean towards lentils. The other factor is faba beans. We've had very good prices for faba beans in Australia the last few years. So if the growers are able to move into other commodities, and the bean price has certainly been better than the pea price, we could, it's certainly going to limit the amount of acres that we could see increased.
Thank you. Now, Baldev, I'd like to know your views. You've been one of the bigger importers into Bombay, importing regularly from long time. What are your views as a buyer, as a consumer? What would you look at? What prices would really induce you to go forward and buy? I would like to know your views.
Thank you, Anuragji. As per my opinion, for the new crop scenario, from Canada, at least I have to wait for the buying at the level of $400 is best price to buy. Until we have to wait for the new crops coming from Russia, Ukraine, French, and other origin. Meanwhile, as on today, with chana prices, the difference between the yellow peas and chana price is around, we can say around $50, $60 different. Further, as per my opinion, we have to wait for the buying new crop for the Canada, and the level about around $390, $400 is the best price to buy for the origin price. Further, we have to wait this price because until no doubt is the market is bullish in the peace cargo as on today, but at least now what number is coming from Russia, what number is coming from Ukrainian, how crop is coming from French, all the scenario will come out, then we'll have to take the interest for the new crop $400.
So you would be a buyer only around $395, $400 for Canadian crop?
Yeah, if price will come $390, $400, definitely I'm the buyer.
So I would like to know from my friends if this price is achievable or not. We have all the other panelists who are willing to buy if they can get an opportunity to get supplies at $395 or $400. So what about the Russian, Chad, I'd like to know about the Russian and Ukrainian peas because they come earlier compared to Canada. Do you think this would matter to Canada if they come earlier and they are offered cheaper? What sort of price levels are you looking at for the new crop from Russia or Ukraine?
Well, I guess first off, just with the Russian, I guess just overall, what we need to remember is this past year, there was a big presence within the feed market. The pea prices were working into the feed market rather well. A good majority of the Black Sea origin peas made their way to the feed market in Europe and Spain, which, if that wasn't there, and knowing that we know what we know today, the wheat, the corn, a lot of the feed complex has changed significantly, which, assuming that everything gets seeded, assuming that we do have the production that we're expecting, those exports that we had this past year, they will have to make their way to the Indian subcontinent. The feed market just isn't there to support that type of volume and these type of prices. So if that does happen, then that's, my personal feeling is that is the major difference this upcoming year compared to last year. Anything else, sorry, specific?
No, that was what I wanted to know about the prices. Like, what prices are you forecasting for the new crop from Russia or Ukraine? Just a ballpark indication, what you feel.
There really hasn't been a lot of activity out of those regions yet, so I'd classify it a little bit different than Canada, where Canada has sold some already. Russia, Ukraine, France, for the most part, it's also been unseasonably cool in those northern regions. So seeding, underway in France a little bit, but for the most part, nothing's been touched. But at the end of the day, let's just take Baldev's buying ideas of, let's say, 390 to 400 CNF. Assuming everything is fine with the crop, you should see Russian selling at those values.
Okay, that's good.
And comparing to the Canadian crop, I don't really want to put a number on it today necessarily, but you're looking easily into the 425 to 450 range, depending on how willing the potential seller is, I guess, for Canadian origin.
Right. And Vijay, I wanted to know from you, apart from India, which of course is a very major destination, how are the other destinations faring? How do you see the demand from Bangladesh, Pakistan, and China?
Just to add on to what Chad said earlier, I think last year everybody who had sold in advance of the crop got affected. So this year I think generally people will be a little bit shy, which is what we are seeing. We are seeing that there are not that many sellers ahead of the crop in Canada and similarly in Russia. So that's people have learned from some of their mistakes last year. Bangladesh this year has had fairly strong demand, I would I would say that they've bought around 350,000 tons. Ramadan is in July, so I guess they are stocking up ahead of the festival. And the demand in Bangladesh at these kind of levels seems to be there on a continuous basis. As regards Pakistan, because of their strong desi crop, they have been a little bit shy to buy. They've been buying in fits and bursts and much lower than last year. So that's where, I think this time is fairly critical. I wouldn't, you've got to be a little bit careful about selling around this time because you're selling, in advance of the crop, as Chad said, before anything is in the ground. So, it's anybody's game, difficult to predict. And I wouldn't want to place any bets as to what kind of numbers I would see coming in from Russia.
Saurabh, I want to know from you about the local Indian markets, the prices ruling in Bombay, Calcutta. Where do you see them right now and how do you see them going forward? What are your views?
Hello? The current prices in Bombay are trading around 450 to 452 CNF equivalent levels. The local prices may go up by $10 to $15 maybe in the near term for next 2 to 3 months, but I don't see them going above 465 kind of levels. Calcutta could be a different story. Calcutta, the local prices currently are trading in the range of 485 to 490 CNF. I think Calcutta would come down to 465, 470 CNF kind of range, mainly because for now Calcutta is sitting with very tight stocks and it is not seeing much arrivals, but it seems that in May and June, Calcutta would see some good arrivals coming in and the spread that we are seeing between Bombay and Calcutta would come down to its normal level. So all in all, I would say for old crop, we see a price range of 445 on the lower side and 465, 470 on the higher side. For new crop, difficult to put a price right now because it would depend on the Canadian production, Russian, France, but the bottom that we should see would be not less than 410 CNF equivalent.
So for the new crop into India from Canada, we've heard in the markets that some trades have happened. What are your views on that as to what levels they would have happened initially?
I think new crop trade started from around 420 CNF kind of levels.
For Bombay?
Sorry?
For Mumbai?
For Mumbai. Okay. And Bombay traded as low as I think 410. Now Bombay is back in the market to buy up to 420, 22 kind of levels. Calcutta new crop would have traded maybe around 430, 428 kind of levels. That's what we hear from the market.
And are you still getting demand at those levels from the buyers?
No, I think the buyers are for now not quoting much because of clarity on the Canada front. Mm-hmm. But I think we would be able to find a buyer at 425 kind of levels for Bombay. Mm-hmm. And we add at least $7 to $10 for Calcutta.
Okay. So Baldev, as you are saying that you would not be a buyer above levels of 495, 500, then after hearing all these gentlemen speak here, have you changed your mind or you are still set on the same values? What do you say?
No change his mind because thing is what happened in India sometime the currency, the exchange currency is sometimes a lot of fluctuation going on. And everybody jumping in the new crop price level around about $425, $460. And the once wise, when the goods arrive the once wise in September, October shipment, the prices crash. So better the safe size have to buy around 400, mind same, no change. The price level to buy, if you think risk side, is a 390, 400 is best price, all right? Because no doubt, peas is the heart of the pulses in India. And compare other pulses as on today is a very cheap price, but this price is level is a very we can say safe price for $390, $400. Compare the currency, compare the weather, compare the rain, everything depend on all the things what to do.
Okay, Vijay, I would like to know about the freight markets also, because freight would predominantly play a very, very important role in the pricing. Where do you see the freight markets going forward in the next few months?
Actually, just before that, one thing I just wanted to draw attention, and this is very interesting what Baldev said about peas being the cheapest pulse available at the moment, and that is driving some of the demand, and that I think is a very important factor, because over the last month, 2 months, we've seen the prices of other pulses move up, and peas has also moved up in conjunction with it, even though the demand and supply may be different, and that I think is going to be one of the most important factors in holding up the prices of peas. Freight-wise, you've seen freight is often a function of the economic data coming out of China. And you saw last couple of days the data, yesterday particularly, some of the data coming out of China was not very good. Gold crashed in a major way, and I think freight markets generally I don't see them going up. I see them fairly stable to maybe going down. One of the reasons why the Canadian freight market has not been affected by global sentiments has been the congestion in Canada and the fact that vessels have to undergo long periods of waiting in Vancouver and Prince Rupert, and likewise the monsoon in the Indian subcontinent. So these are the factors that are maintaining the freight rates. New crop, I see them coming down a bit. I don't see them coming down an awful lot, but maybe a few dollars from the levels that they are now. And I don't see the freight market really going up too much. I think the rest of the year they'll be fairly stable after going down from what they are at the moment.
And what is your take on the US dollar? Where do you see the dollar with these funds and the so-called hedge funds dumping gold and other precious metals to jump on the bandwagon of maybe more risky assets like equities? Where do you see the US dollar?
No, I think you'll have to look at the US dollar vis-a-vis some currency. I think if you ask me vis-a-vis the Singapore dollar, that's a dollar that's always been very, very firm. But against the Indian rupee, I'm not very optimistic. I think the Indian rupee will be under pressure, and I don't think you can expect the rupee to get back to the levels of 44 or 54 or anything like that. I think around maybe between the 55, 50 to 56.
And you do not see depreciating further beyond 55?
I don't see the Indian rupee appreciating further.
Mm-hmm. What is your take on the currency, Saurabh? What do you see the US dollar vis-a-vis the Indian rupee?
I would say the Indian current account deficit is quite high, and the receivables from export side is way low than the India's spend on the imports. So the situation won't improve much, and below 54 Indian rupee looks difficult to sustain because of the pressure that it's going to see from the import of oil and gold and all those things. Yes, what would change is the way gold prices have corrected, and what we are seeing is that even crude oil is correcting. If the Indian import bill goes down significantly, we could see then rupee heading back to 53.50 kind of levels, 53 kind of levels. But overall, given current, assuming the situation which is there right now, it seems that Indian rupee would trade in a range of 54 to 56.
Because just last week I remember reading a very big article on the front page of the Economic Times, and it mentioned that the rupee would by December go to levels of 60 rupees to $1. So I was discussing this with one of my friends, and they said if the economists are predicting 60, it'll definitely be at 50 by the end of December. So I would like to know about that.
Last year when Indian rupee was trading at 57 kind of levels, that time all the bankers and everybody was talking of 60, 65 on the cards, and from 57 it turned. So it's difficult to predict, but the scenario is not very optimistic on India's fiscal situation and all other fronts. So.
Because if we see the rupee coming under pressure, then obviously the costings on the import side would be higher for all the importers. This also would lead to a definite reduction in the buying prospects from Canada or from other origins for the pea importers.
Definitely.
Mm-hmm. Andrew, coming back to you. Like we've always seen dun pea prices hover much, much higher than yellow peas and other origins. Why is the reason that Australia has been so expensive compared to the other origins?
Yeah, I think the farmer's been a very reluctant seller given the price of where other commodities have been, whether it's been wheat or beans that I mentioned before. Basically, over the last 18 months in Australia, the farmer's been able to get over a $300 track price for his wheat. So the return on that has been quite good. Whereas relative to peas, it's really only probably been a $20 or $30 premium to the peas or to the wheat. So he hasn't been a desperate seller, I guess. And we've had extraordinarily good crops the last few years in Australia. So again, there isn't that hunger, I think, to quit the crop and to get the cash returns. So,
but earlier, I'd like to interrupt. Earlier, we have seen, like in the past few years, a lot of vessels, bulk vessels were loaded for the Indian subcontinent, predominantly for Calcutta. But I've seen, for the last couple of years, not a single bulk vessel into Calcutta has come from Australia. Mostly the shipments are now containerized shipments, and the focus is always on Tuticorin. So do you see this trend changing, or this trend will continue in the near future?
In the system in Australia where we have to secure slots for bulk elevations, quite complicated. So if you do want the bulk elevation, you have to secure it many months in advance. So that probably does push peas back into containers to a fair degree. That being said, I think the pea crop in Australia has probably been contracting over recent years, and again, because there has been higher price alternatives. We've mentioned that peas are the cheapest pulse. Well, again, under that scenario, the farmer's not going to rush to plant peas relative to other commodities.
Thank you. Would you like to say something, Saurabh?
I would like to add something on your question on why dun peas are not coming to Calcutta but Tuticorin. The reason is the substitute of chana, which is being southern market uses Casper peas or dun peas as a substitute for chana, not as a substitute for peas. And in last 3 years, the affinity to use Casper peas in the fried gram industry in South India has increased, and it has become a preferred product. So, like in past, we were seeing Casper peas or dun peas trading at $10 discount to yellow peas, is now trading at $30 to $40 premium to yellow peas. So it's a totally different end use that we are looking at dun peas. So I see this dun peas market is not going to move 1:1 with yellow peas.
Right. So this is what I want our audience also to know, because a lot of people have been coming up with these questions. Now, ladies and gentlemen, since you've been through this informative session.
Thank you, Mr. Roland. Moving on to Mr. Vijay Iyengar. Thank you, sir. Agrico International. Stepping forward, Shad Popovich. And from Ruchi Worldwide, Baldev Limbachia. Saurav's already picked up one for the day. Thank you, but a good photo opportunity. And I'd like to present one for you. Oh, perfect. I think that makes great sense. There you go. Thank you, Saurav. Thank you, Mr. Limbachia.